Federal Reserve Chairman today at the meeting there at the Federal Reserve announcing that they will keep their interest rate, their key rate, unchanged after having raised it, you'll remember, 10 straight times in a row to combat high inflation. This is a surprise move. People are talking about it today. The Fed signaled, though, that it may raise rates again later this year, possibly twice more later this year, beginning as soon as next month. But this month, no rate hikes at all. So the move to leave the rate at about 5.1%, its highest level in 16 years, suggests possibly that it believes the much higher borrowing rates it's engineered have made some progress in taming inflation. Let's step away from this right now. Let's bring in economics expert with Potomac Core Association Consulting, Daniel Varroney, and he joins me now. Daniel, good to see you. Thanks so much for being with us. So we talk about this each and every time Jerome Powell, holds a meeting like this, and 10 times you and I have talked about an interest rate hike. Well, not today. No interest rate hike. It's being put on pause. What does this mean for the overall economy?
Well, it's not quite as simple as that, Andrew, because what we have is like anybody that thinks that inflation's been cured or inflation's been solved is sorely mistaken. So when the Fed chair spoke today, he talked about the core PCE number being at 4.7%, which, by the way, is more than twice of the Fed's target. So that being the case, what the Fed Board of Governors and the Fed chair decided to do today was to say, let's hit the pause button for this reason. Let's see if the CPI and the other numbers continue to go in the right direction. Because if they do, then we don't have to increase rates by another 25 basis points. Now, from my perspective, on the basis of what I'm seeing, is that prices are still exceedingly high. Consumers are having a very difficult time paying those prices. The Fed looks at a lot of data every day of the week. They're seeing these numbers. They're seeing the difficulty. They're seeing consumer credit card debt flying to $1 trillion.
Yeah.
And they're saying, okay, let's wait and see. But what was interesting when Fed Chair Powell polled the Board of Governors and they said, where do you think the Fed's terminal rate, meaning the highest rate, will be by the end of this year? They said 5.6%. Yeah. So, Andrew, I want to take you back to our earlier conversations. My expectation was that easily the terminal rate would go to 5.5% or higher. So here's why. In order to get inflation under control, you've got to be 1.5% or more higher than the actual inflation rate itself. So if the core PCE rate is 4.7%, you've got to be at 5.5%, more like 6% or more. So that's why they're sort of waiting to see if the numbers come down. But I will tell you, the terminal rate by year end, easily 5.6%. I wouldn't be surprised if it was a little higher than that.
Oh, wow. So you're kind of alluding to the fact that this might just be another tool in the toolkit of the Federal Reserve as possibly a test. Let's not raise interest rates this month to see if what we have been doing is working.
Yes, exactly. So here's what their challenge is. So when the White House announced yesterday that, the CPI had gone down and year over year it had gone down, the issue with inflation is that it has a cumulative effect, meaning that from February of 2021 all the way to today, remember we went from 4% all the way to the high a year ago, which was May of 22 at 9.1%. All of those increases in inflation have a cumulative impact on prices. That's why prices are still high. The Fed is noting very seriously that they see those high prices. That's why they raised rates 10 times. They hit the pause button. Yeah. But honestly, it's my expectation they will raise rates at least 2 more times by 25 basis points by the end of the year.
Wow. Just briefly, though, with you, Dan, on the CPI numbers and the report just yesterday that came out, any nodes of optimism there? Because you heard a lot yesterday that economists like yourself were saying, well, inflation is cooling. Obviously, it's not to Jerome Powell and the Fed's 2% benchmark rate that they want to get it back down to, but it is cooling. Were you optimistic yesterday?
So I was optimistic that the number was coming down. The issue is that prices are still going up. Prices are still going up. So every consumer knows that. You and I know that when we go to the food store. In some cases, I'm noticing that my wife and I are paying 3 times more than we were 2 years ago for our total food bill on a weekly basis. Now, in yesterday's CPI report, I did dig deep into that data. What I did observe, and this is positive news, that energy costs were lower than they were considerably a year ago. And that was a contributing factor to the reduction in the CPI last month, meaning May of 2023.
All right, we're just going to have to keep watching all of this data as we get into these later summer months. Dan Varroney, as always, we appreciate your insight into these major economic headlines, and we'll talk again. Thanks.
Thanks so much.